Hello, the bulls are firmly in charge this week. Tight systems, rising carbon prices and low wind generation have all contributed to the upward direction. So let's have a look in some more detail. A cyber attack on the Colonial Pipeline Company forced operations to shut down, pressured prices higher on Monday morning. However, by the afternoon, prices eased, taking direction from rising COVID cases in India. Front-month Brent closed on Monday down $0.19 per barrel compared to Friday's session. Prices started to move higher again on Tuesday. A strong US dollar and rising demand forecasts from OPEC provided the support. The weekly EIA report issued on Wednesday showed a reduction in stocks of 0.4 million barrels. Coupled with revised forecasts from both OPEC and the IEA suggesting that global demand for oil will continue to rise, and this put upward pressure on prices. Brent fell on Thursday. Signs that the US economy may not be recovering as anticipated reduced the strength of the dollar. Last night, front-month Brent closed at $67.49 per barrel, down nearly $0.50 compared to last Friday. Gas prices were bullish on Monday and carbon once again reached a new record high of €52 per tonne. Near-term contracts made the biggest session-on-session gain of nearly 3 pence per therm, a 4.5% movement. Prices continued to climb on Tuesday, pressured by a tight system and further strength seen in the carbon markets. There was no let-up on Wednesday and once again prices were supported by the wider fuels complex. Wind generation also fell, which put further pressure on gas demand. Thursday's session was bearish for most of the day. The system was long, oil prices were falling and increased LNG send-outs all provided downward pressure. However, late in the day, all contracts reversed, with near-term contracts closing higher day on day, whilst curve contracts held on to some of the daily losses. Last night, all contracts closed higher than last Friday. June 21 contract closed up nearly 9%, whilst contracts from October 21 onwards gained between 3 and 7%. In line with gas, all power contracts firmed on Monday. Higher gas, coal, carbon, oil, as well as lower wind generation all contributed to the gains. Prices continued to climb on Tuesday. Wind generation was forecast to remain well below the seasonal norm for at least the next week, and this put more pressure on gas-fired generation. The bull run continued into Wednesday, but like gas prices softened early on Thursday morning, despite carbon prices continuing to rise. And last night, all power contracts closed higher than last Friday. Near-term contracts up around 8% and longer-dated contracts were up around 5%. You can download the full version of this report from our website. Thanks for watching, as always, and we'll see you next week.